Hello, I'm Jim Lebenthal, the Chief Market Strategist at Treasury Partners and a member of our Investment Office and Investment Committee. This is our outlook on the financial markets and economy for the month of July 2026. Wow, is there a lot going on. We have a peace deal between the U.S. and Iran. Well, maybe a stability deal is a better way of terming it. We've got collapsing oil prices. We've got a new Fed chair. SpaceX has gone public. There's a little mini tech sell-off going on. That's a lot going on. And to put it in its proper context, we have to examine the state of the financial markets and the economy as they sit right now. Both are really quite healthy. To start with, in the financial markets, the S&P 500 is up 8% year to date and only 3% off of its recent all-time high. Small cap stocks and international stocks are doing even better. In the Treasury market, the 10-year Treasury is currently yielding 4.43%. That's a level that really indicates no stress at all. In fact, it's in the middle of a 3-year range for the 10-year Treasury yield between 4 and 5%. As I mentioned, oil prices are coming down. West Texas Intermediate is now about $70 a barrel. That's just about what it was before the war with Iran started, and it's down 35% from those April highs. The US dollar is rising. All in all, the financial markets look pretty good. And so does the U.S. economy. We're currently projecting 3.0% GDP growth in the second quarter, which is slightly above trend. We've got improving labor market conditions, and most macroeconomic indicators are flashing green lights for the road ahead. International economies may have a little bit of a tough time in the third quarter as they digest the energy shock from the war with Iran. Remember, they're not as insulated as the United States. We have energy independence, whereas most developed economies in Europe and Asia do not. But that effect should fade soon. So if we look at these good conditions in the financial markets and economy, what is there to worry about? Well, yes, the war with Iran could always flare up again. We don't think it will. We think we're well past peak hostilities. The real thing to watch out for in the financial markets is what will the Fed do? As I mentioned, we have a new Fed chair in Kevin Warsh. The financial markets like to test a new Fed chair, and that can take the form of a correction in the equity markets. A couple of things to note about corrections. Number one, they usually happen, usually once a year. The second thing is we don't recommend timing corrections. We just buckle our seatbelts and get through them. By the way, we don't think that the Fed will raise rates this year, even though the Fed funds futures market and the 2-year Treasury yield indicates that it probably will. We think that the human beings on the Federal Open Market Committee will look at the collapse in energy prices and realize that's going to flow through to inflation measures. Accordingly, they probably won't want to risk losing jobs by raising rates. Now, we look forward to updating you in another month when we have more data under our belt. Thank you for listening.